Hey everybody, this is Jose Blasco. We are 25 seconds away before we start the session. So ready to start. Sound check, please. Can I have a quick confirmation on the chat box? Quick message from you would do just to confirm that you hear me well. That way I know we are ready to get started and technology is on our side. So everyone is ready. So quick confirmation, we got 5 more seconds and we begin. Very good. That's it. We are live, everyone. We're live. Welcome to the session, August 6, 2020. By the way, I'm just realizing I forgot to turn on the video stream. Let me say hi from my bottom right corner there. How are you, everyone? Good to see you. As I was saying, August 6, 2020. Today, we are getting together for longer-term trading purposes. So we're going to be exploit options trading, looking at directional as well as non-directional trading. We will also be looking at the trades that we have running in the account already, as well as trades that are to be executed or that are valid based on the set of rules that we use. And therefore, you could certainly work with me on those setups and so on, and make sure and feel free to be interactive and type and ask questions and don't be shy while we are running the session. Okay. Before we start, a quick one. I would like to go ahead and read the disclaimer for you. Actually, I'm just gonna highlight it so you can read it yourself carefully. This is important information, obviously. So please go ahead and read that disclaimer. Okay, following videos, clips, demonstrations are for educational and instructional purposes only. So obviously, as I was saying, feel free to ask questions, as many as you need to clarify the setups, because in the end, executing the trades or not depends on you, isn't it? As well as executing the trades with real money or paper money, larger size, smaller size. All of these are your decisions. Okay, my decisions will be to find the right setups that meet our rules and explain why. And again, working as a team, teaming up in this process, it's important. So please be interactive. Anyway, let's begin. Furman, how are you? Good to see you, Furman. Let's go ahead and go for it. I'm just gonna close the introduction slide, jump into TradeStation, and here we are in TradeStation. We can see the S&P just hit a red UFO, falling down into the green UFO. Beautiful moves recently in many markets. Actually, everything is moving very nicely. Gold is moving crazy. The euro is moving crazy. The equities, especially when you think about the reality of the situation in the world with pandemics and everything else, is unbelievable. The movements that we get to see and experience and trade. So it's really fun times for traders out there, isn't it? But anyway, so talking about fun times, okay, let's look at the trades that we have identified in prior sessions. And let's have a quick recap of what's happening to those trades. I'll start with CVS, okay? So CVS is a trade that we started executing, long time ago, okay? So we actually put together this trade. It was July 2nd, okay? So it's been over a month. And since we entered the trade, that stock went all the way against us, then back up, then all the way against us again, and then back up, and then another teaser down against us, and finally now it started to pick up direction, and it's looking like it may continue, okay? Especially if you look at the climate and so on, and you look at what the broad markets, the S&P is doing. So we are in a situation where hopefully that market begins moving in our direction, okay? And if that's the case, we're going to get very aggressive here with trade management, okay? Because if I was to look at Option Station Pro, you will very likely see that this particular trade is underwater, even though we are slightly above the entry price, because it took a month for this to happen. And options decay as time passes. So we are very likely going to see a little bit of a negative P&L there with CVS, as you can see, CVS right here with negative 111. Okay, so we're just gonna wait for that stock to move a bit more, if that's gonna be the case, and collect a profit and get out of this trade and plan on other trades that may be more efficient, because it's been a whole month of time passing for that stock to finally look like it wants to pick up direction. All of this has been a very volatile, but in the end, range sideways market, and therefore it went nowhere. Okay, so one more thing to keep in mind. Let me go back to this screen. We're looking at CVS. We got 15 days to go for the expiration date. Okay, so again, the moment this trade becomes profitable, we're gonna get out. I'll be actually even happy to get out for a break-even result in this case, because really, obviously, this is a situation where we were expecting something to happen, and it absolutely did not happen. Okay, so exiting at a break-even point, while something totally different than what we were expecting ended up happening, it's certainly a valid result. Okay, and also, if you look at my portfolio, I'm running 3 trades in parallel here. Of course, we are meeting in the YouTube channel once a week. So, normally we had 1 or 2 trades a day. So that's why I got only 3. If you do this properly, you would have a portfolio with multiple positions that you're running parallel. And sometimes you'll have positions that give you that situation where you have a negative P&L, and then you may be able to exit for break even. You'll take it, it's fine, because you will have other positions working in parallel that will end up with a better profit, as well as other positions that may end up with a full loss. Okay, like it happened last week with one of our trades. I forgot the stock symbol right now, but it did happen, right? So this will happen too. So again, having a mix of results, a mix of opportunities, some pointing to the upside, some pointing to the downside, etc., it's going to be the recipe to make our trading more stable, more consistent, if you wish. Okay. Anyway, so let's continue. What else do we have? Nike. Okay, another teaser. Okay, really, the stocks that we executed. It's maybe Murphy's Law, something that happens on the Thursdays. I'm not sure. I'm joking right now. But anyway, so it seems that both CVS and Nike have done something very similar since we entered. That was 7/10. That was July 10. So notice how this market has been just moving sideways, doing nothing. Okay, and now it seems to be deciding itself to move against us, because this is a trade. The Nike trade is a trade. If I show you, you'll see the Nike trade doesn't use calls like CVS. The Nike trade is using puts. So this trade is going to make money if the market falls. This one got much more time. We got 71 days to go in this case, given the rules that we applied at that time. So, it's fine. Right now it's showing negative 194. Not a problem. It's a hedge, isn't it? You would be running other trades in parallel, so you would have multiple stocks that are making money to the upside as the S&P has been moving up, and Nike is giving you a little bit of pain. It's fine. But now if the market was to tank, so Nike would start making money for us, and that's how we hedge. Okay, we hedge with the deltas and we hedge with the gammas, isn't it? The worst thing that could happen to us, which is happening with CVS and Nike, is that we get hurt on theta, because delta and gamma are taking care of themselves and we are fine. But the time passing when the stock is going sideways, this is the last thing we want to see. And in this particular case, with both CVS and Nike, is happening. Okay, so a little bit of a challenging situation there, even though it's part of trading and it's really a normal thing that you will see happen from time to time to your account. Okay, you cannot be like profiting at a certain rate all the time. There will be times where you profit faster. There will be times where you profit more slowly. There will be times where it's somewhere in between. Okay, cool. Roku. This one is a trade that ended up with a full profit. Okay, we were looking at this last Thursday. I remember making the comment. It was looking like almost a sure thing that we would hit July 31st. Okay, trading, the price was about here. That was Thursday. These candles belong to Friday. So we were about there, right? We were about there when we met last time on Thursday, and I said, okay, it's almost a sure thing, because this trade, we simply needed the stock to stay above 115 to end up in a profit. Okay, and certainly on Thursday we were trading around 150. So it was, again, we should never say a sure thing, because there is nothing sure in trading, but it was almost, let's call it like that, let's use a bit of humor, it was almost a sure thing given how far price was from the 115 mark. And indeed, that trade ended up as a full profit, as you can see, hitting the vertical line 7/31st, which was the expiration date for those options, okay, with a credit spread. And same happened with Beyond Meat. Okay, with Beyond Meat, let me zoom in properly. So with Beyond Meat, okay, we were expecting the stock to stay in the purple range until 7/31. Okay, again, last Thursday, price was here, and we said, hey, we are right in the middle of the range. It would be very strange to break the range in one day of trading. So it's almost a sure thing we're gonna profit, and indeed we hit that vertical line, and it was a full profit. Okay, so both trades, the one with the credit spread with Roku, as well as the Iron Condor with Beyond Meat, ended up as a poor profit. Okay, and then we had another directional trade with Philip Morris that we entered on the last week, isn't it? 7/31st. Okay, so that was going to be that. Actually, I planned this trade. It was not in the YouTube channel. Now I remember. It was last Friday, 7/31st, and basically what I said is there was a green UFO there where the purple line is, and I said if price comes in, I'm just gonna get long. Okay, and basically we purchased calls on Philip Morris. Okay, and Philip Morris is basically at the same price where we entered the trade. Of course, we got a 1 week of time decay, so we see a little bit of pain there. But really, it's not so concerning compared to CVS, for example, where it took a whole month, okay, to get there. Okay, so the climate is in our favor. Okay, climate is number 2 out of 9. So if that climate begins propagating like it did before, okay, we're gonna see a very nice push and hopefully hit our target at 79.09. So we are in this trade, as you can see in the account here. And that trade is done in a simplistic way by just buying a call, as you can see. Okay, 43 days to expiration. Again, that was a trade from the last week. So with all of this said, those trades are now reviewed, and therefore the fun begins. Let's now go ahead and begin planning on new trades to be executed. We still got 35 to 40 minutes to go before the end of the session, so certainly we should be able to identify some tradable opportunities in it. So I'm starting with non-directional trades, and I just sorted, as you can see, by double clicking on the header. I sorted those stocks that I got from the scanner that I ran earlier. I got them sorted by price, okay, where the one on the top is Adobe. So I'm gonna load the chart of Adobe, and while I do that, I'm gonna bring Adobe on TradingView so I can check when is the next earnings report. And that's happening in the middle of September, which is very, very good in the sense that it allows me to utilize expiration dates, could be on the 14th of August, could be 21st, could be 28th. So I got many expiration dates I could use here. Of course, we know the shorter the time to expiration, the better. So I'm going to start working with the 14th of August, which is next Friday. Okay, not tomorrow, but the Friday after. And see if we can take advantage of this one. Okay, so we also got 49% probabilities. Okay, we need 48% or more for non-directional trades. With pre and post market, we have 43%. So pre and post market is not acceptable to plan a trade with Adobe, but regular session data is providing us with 49.32%, and that is indeed acceptable. So we are going to begin with the planning. Okay, so let's go for it. ADB, Adobe, let's load the option chain, okay, and move into August 14, okay, and without thinking too much about this, I'm just gonna right click and analyze and sell, and iron condor, okay, bring it here into the screen. I need to add another price slice, okay, so we're gonna have plus 1 standard deviation above, we're gonna have the last price in the middle, and minus 1 standard deviation below, okay, and that is telling us that putting on the side, we still need to adjust the iron condor that I am planning right now. No matter the strategy we use, from now until August 14, statistics suggest that the stock should stay between 477, okay, and 434. Okay, so 477 and 434. So without much thinking, I'm just gonna plot the lines on the chart, okay, and 477 is all the way above those UFOs. So let me take a look at something important here, okay, because notice how if I look at a monthly time frame of Adobe, it seems that we are making all-time high. I mean, it's not like it seems like it's a major all-time high. What a parabolic move! Absolutely amazing. And therefore, what I'm trying to say, if I go back to my 55-minute time frame, is that the highest UFOs we have are actually the ones I have on the screen. And probabilities suggest that from now until August 14, we may reach 477, okay, which is way past our UFOs, and therefore an iron condor using that date cannot be used. Okay, so normally you would then give up on this trade and go find another one. But since Adobe is a $400 overpriced stock, meaning it's quite pricey compared to the majority of stocks in the US market, well, we may get plenty of premium for that stock. And therefore, I want to do something that normally doesn't work well, even though when it works, it's very nice, which is I'm going to use August 7 expiration, okay, August 7 expiration, and see if the trade works or it doesn't, okay? It may work again because this is such a pricey stock, and because options derive their value from the underlying asset, and the underlying asset is a pricey stock, we may get enough premium that justify the risk of the trade, which normally will never happen with 1 day and a half to expiration, okay? So I'm going to move to August 7, okay? And now probability suggests the stock may move in between 445 to 464. So let's see where is 464. And 464, it's somewhere here. So indeed, okay, if probability suggests that that market is not going to surpass that price point, and then we have UFOs above, isn't it? And on top of that, we got at least 2, which is what our rules demand, right? So we need at least 2. Okay, so then we are fine. Okay, now in the bottom part, probability suggests 464 above and 445 below. So let's move to 445, okay, which is more or less here. Okay, something like that. So this is the statistical range. Of course, we cannot rely only on pure statistics. We need on-field orders. That's the key. So now statistics are a good reference point. So now I'm going to count. I need at least 2 red UFOs, okay, to protect myself. So if I was to use the 470s, it would make sense. And then if I do 2 UFOs below as well, and I go there, so I will have two UFOs above, 2 UFOs below. Price is more or less in the middle. Both of those UFOs above and below are beyond the statistical values where price is supposed to be from now until tomorrow, the end of the day. And therefore, we do have a valid setup on the chart, at least in the theory world. The key question is how much I get paid for the 470 calls, okay? And unfortunately, the answer is disappointing. We need a minimum of 35 cents, isn't it? And in this case, we are being paid 22 cents, which is not enough, okay? Which is not enough. And I cannot go lower than 470 because even though the statistics suggest 464, I need at least 2 UFOs to defend myself, and the 470, basically the 470 calls are not paying enough, okay? So a bit disappointing, but that's what it is. So let's continue, and let's move to now that the trade with Adobe has been discarded. We can check on other stocks to see if the trade is going to work. Now we have a similar situation. So we are making or about to make all-time high. In this case, I'm concerned because we only have 1 UFO. Great probabilities, but only 1. And I want to check with pre and post market to see what happens. Probabilities are not enough, actually. And also, I only have 1. So in other words, I cannot do this trade because I am lacking UFOs. Remember what I said before, I need at least 2 UFOs above and below to defend myself and help for the price of that particular market to remain in the range from now until the expiration date. Okay, so we're not going to do it. Biogen, while I'm loading the chart here, something I want to do is I'm going to go and check the option chain for Biogen because it's been a few times that I've been looking at Biogen for a few trades, and I've been very disappointed with the option chain. And today I am too, 85 to 285. This is crazy. If I look at 14th of August, 360 to 460, it's also quite crazy. Last try, what if I look at the monthly expiration date? The monthly should be more liquid. 470 to 6, you know, it's really bad liquidity with Biogen. This stock has been degrading through time. It's never been like super liquid, but certainly this is not good. And Tiffany's is also another stock that I had great experiences in the past trading Tiffany's, but in the recent times when looking at the option chains, it's like there is no liquidity at all. So I want to check Tiffany's and look at that, 5 to 240, 5 to 247. It's absolutely nuts. So yeah, 21 of August, 150 to 265. Yeah, really weak level of liquidity. Extremely weird because the open interest is there. And it probably means that something's happening behind the scenes to this company. I don't know what it is. Maybe you do. Maybe you have done some research and you do. I don't, but market makers know something I don't know. And that's why the prices of the option look so wide, the bid and the ask prices look so wide from each other. And I don't want to get into a territory where there may be a risk, which is unknown to me, but certainly those prices, those wide, majorly wide spreads on a stock that has open interest, it's certainly the recipe to get in danger, and I don't want to be there. Okay, so I'm just gonna pass on that. What else? IEF is an ETF. I'm gonna pass on this one. XBI is an ETF. I'll pass on this one. FISV, that's a stock. So let's take a look at where we are at with that stock. Okay, notice that stock is not making all-time high. Okay, it's much lower. All-time highs was more or less about 120, so that's about 20% higher. Okay, we got 54% UFO performance stats. Okay, we have a UFOs above and below. So we may have something here, even though the distance from the UFOs above and below seem to be quite far. And if I look at pre and post market data, those statistics are not acceptable. Okay, so the only way to trade that stock would be to use longer term expiration options and rely on UFOs that are very, very far. Okay, very, very far. So again, could it work to use the UFOs above and the UFO below? I mean, the range is beautiful. It's an amazing range. But wow, we may need to do this trade with very long expiration dates. And I'm not sure that even like that, what was the stock again? Sorry, FISV. Yes, correct. So FISV. So earnings happened on August 5. Okay, so that was yesterday. So again, even with that, on top of that, so what normally happens when the earnings were reported the day before, let me show you something, guys. So I'm going to move to the daily time frame just so I can show you implied volatility. So the implied volatility of that stock as of the close of yesterday was 44.69%. Okay. The real-time volatility for that stock, FISV, okay, if you were to look at those values here on the right, you got 40, 30, 28, okay, 40, 30, 28, 33, 31. If you were to average that, okay, it's way less than 44. Okay, and why is that? Is because the implied volatility values that we see on the chart and that are also being used on the scanner, they have updates at the end of the day. And since that stock reported earnings yesterday and today is the new day, we will not really know the new value for volatilities until the end of today. So I got two problems with that chart, with that stock, which is number one, the UFOs are so far from each other, they create a problem because they would force me to use very long-term expiration dates and use options very far away. But the other thing that happens is that on top of that, I may be thinking options are nicely overpriced, where the problem is that they may not be at all. Okay, so I better wait for tomorrow and see what happens tomorrow. Okay, so we have TAL. Let me take a look at the monthly time frame of TAL, and another stock making all-time high. So when I look at the 55-minute time frame, I have one UFO there. Okay, one UFO. Probability is 4809. I still need to wait because we are pending data here. So okay, it's 45. So in the end, it's not acceptable. And if I look at pre and post market, it's even less acceptable. So we're gonna pass. Okay. What about SPG? Okay, SPG is a construction company, if you wish. It's related to real estate, isn't it? And with pre and post market, we have 50%. So that's very good. If we look at regular session, we have 45%. That is not very good. So with that stock, we're going to have to use pre and post market. Okay, here we go. Pre and post market, and we have UFOs above and below. Unfortunately, very far away. Okay, so we're going to have to use those 44, 45 puts. That's very far away. I would say it's going to be almost impossible to work, but let's give it a quick try. Because again, those situations where you feel it's almost impossible, but then it works, those are normally very high probability trades. Well, we're not going to do it anyway because earnings are happening on the 10th of August. Okay, 10th of August. Today it's 6th of August. Okay, 6th of August. 10th of August is happening on Monday. Next expiration date is on the 14th. Of course, we cannot have earnings happen before expiration. and therefore we're gonna have to pass on SPG. And it seems I have a last one to check, which is well. Okay, so let's see what's gonna happen with that stock. Pending data, so let's wait to see. Yep, we have it. So here we go. So 35% with pre and post market, absolutely not acceptable. Regular session provides us with 43%. It's not good either. Okay, not good either. And by the way, 6% up. Probably the stock has reported earnings today, I would guess. Okay, so from a directional point of view, guys, no trade. Okay, no trade. We would certainly look into non-directional neutral, okay, which are only betting on the price not falling, or non-directional neutral to the downside, only betting that the stock will not rally. So we could certainly do that, and we may find opportunities by doing so. Okay, so let's take a look at Microsoft. Let's begin with Microsoft and see if we can find an opportunity like the one I just described. Okay, and by the way, we had this beautiful all-time high trade that we executed not so long ago, isn't it? So with Microsoft, earnings are going to happen not sooner than October 22nd. Okay, the prior earnings happen at the end of July. Okay, so we have huge amount of freedom there when it comes to picking expiration dates. Okay, so we may have an opportunity here to have a proper trade with Microsoft. So let's take a look. By the way, my friends, you have been very, very quiet during the session today. And probably it's because, I just keep going. So I don't let you time to breathe, okay? Since I want to be efficient with our time. But at the same time, just know that if you have any question, you guys feel free to phrase it, okay? So go ahead and type your questions if you have any, or just like Sandeep, just type hello. I would love that. Hello, Sandeep, how are you? Good to get your message, and certainly, guys, don't be shy, okay? Just say hi and just interact. So anyway, so I'm just gonna right click here to analyze and sell a vertical spread. Okay, analyze and sell a vertical spread. I will add two price slices, which is the current price and the minus one standard deviation. So I care about using August 14. Okay, if I use August 14, what I care about is which one is the lowest price at which Microsoft could fall based on stats. Okay, which doesn't mean it's an absolute and it's a guarantee. But based on stats, I now know that the lowest price should go based on stats from now until next Friday, August 14. It's 203.09, 202.70 now. So let's go ahead and draw a line at 202 point something. Okay, and make this line to be dotted as well, and then I'll adjust it. Okay, dot. So 202 point something is more or less here. And if you think about it, we have one UFO there, but remember the rule when we do non-directional trades is to always have at least two UFOs to defend yourself. So you have one and then you have two. Okay, one and two. Therefore, we are talking about the 193s. And when I look at the option chain, we don't have 193s. I believe it's going to be 192.5. Here we go. Here's the 192.5. And if I look at the midpoint of this one, it only pays 20 cents, which is not acceptable. Okay, it's not acceptable. The minimum we want to use is 35, isn't it? That's the minimum we want to use. So what I'm going to do is move from August 24 to August 21st. That, by the way, gives me a little bit of an advantage with liquidity because it's a monthly expiration date. Not that Microsoft needs too much help with liquidity. This is a very traded, very highly traded stock. Look at the open interest, thousands of contracts, okay, non-stop. So any expiration date I would say is going to be good enough, but always always optimal if you wish, if you could use the third Friday of the month. Okay. Furman, good to see you. Maranu, good to see you as well. Good to see you guys. So anyway, so switching from August 14 to August 21st. And when that happens, of course, statistics are recalculated. And now what stats suggest is that stock is not going to go below 199. Okay, so I'm going to replace my line to 199. Okay, which is more or less there. And notice how, if I was to use 193, I'm still fine because I still have two UFOs to defend myself. And my final UFO is located beyond the dotted line that represents the statistical distance, that price we travel from now until August 21st. Okay, so let's take a look like we did earlier. If we do the 192.5, because there is no 193, how much we get paid. Okay, and in this case, we can see that we get paid 66. Okay, and that is certainly very good, even though I am really unhappy to see the other prices. And let me tell you, this trade is not going to work. It's not going to work, but let me show you why. Okay, so we're going to use 192.5. Okay, and the one below, 192.5, and the one below, which is 190. Okay, and when we do that, you can see that I would collect a net credit. If I get the midpoint of the spread, I will collect a net credit of 15 cents. And the reason why we're not going to accept that, okay, is because we have a rule that says that we want to collect at least 15% of the raw risk. And what is the raw risk? Well, the raw risk, okay, is the distance between strikes, okay, which is $2.5, okay, $2.5. So 15% of one is 15, but 15% of 2.5, it's 37.5 cents. And in this case, as you can see, we only get paid 15. So we are not able to collect the minimum 15% that we require for this type of trades. Okay, I guess many people are doing these trades on Microsoft as we speak, and the more people sell, the more the prices drop, and therefore we end up in this problematic situation where, while the setup is valid, we don't get paid enough for the trade. So you have two choices: just wait, okay, and maybe Microsoft will fall a little bit, and some people will get scared, and therefore they will start buying puts instead of selling puts, and now you can sell the puts to them, as long as the rules of the trade are still met, and you get the credit we need, which is 37.5 or more. Then it's fine to take the trade. But as of now, it's not the case. So you need to either watch it or wait or go trade another stock. Okay, so we're gonna do that. I guess we're gonna have to ignore Microsoft and move into the next one in the list, which is Baidu. So Baidu, let me see where we're at. Earnings happening on the 13th of August, so we cannot do this one. Okay, earnings are too soon. So back to TradeStation. T-Mobile, I'm just gonna skip. Okay, if you've been in the sessions with me for a while, you probably have heard me say that normally utility companies is almost like an ETF. They are normally quite safe stocks. People buy them because they get dividends, and they are normally very stable companies. And that means that you get extremely little premium on the options most of the times. Okay, therefore I'm not gonna bother and check since we have limited time left in the session. Okay, so TAL education, we said those probabilities are not good enough. JD, okay, so let's take a look at earnings for JD. So earnings happen on the 14th of August, okay, the 14th of August, so it doesn't work because that would be the expiration day we will use. What about TJX? So TJX, as you can see here, we attempted recently an iron condor. I guess it was not giving us what we needed. So let's see if this time it will be different with a credit spread. So earnings is on the 18th of August, okay, 18th of August. So we can certainly try to do a trade using expiration August 14. Okay. How are you, Plabon? Nice to see you. Thanks for joining us. So let's go ahead and do it. Okay, so I'm just gonna do a little bit of deleting here. Okay, and as always, work on the stats first. So I got my reference point objectively instead of having a guess. Okay, and we're gonna be looking at again, we just said the further out we can go in this case is August 14. So I'm just gonna right click, analyze and sell to do a vertical spread. And with August 14, it says here the lowest it should go is 51. Okay, 51. So I'm just going to go back to my chart, plot my 51, which is somewhere here. Okay, and now look at two UFOs below that, or not really below that, two UFOs below price, where the final UFO is beyond the dotted line, and that will allow me to use 49 as a valid strike for me to sell options are at. So the real question is, we have a valid trade setup, but the real question is how much we get paid to sell the 49 put. Okay, and I have a concern. Apart from the fact that we don't get the 35 we need. Okay, and I want to make a comment related to that in a second as well. My biggest issue here is that on top of that, if there was premium enough, I would still not take the trade because no one is there to buy. Okay, no one is there to buy. So if I want to exit this trade at some point, I would not be able to exit. I'm going to be stuck on this trade because there is no liquidity. Okay, there is only 26 contract that executed. Okay, and that's okay. That may be okay as long as you have a bid. But right now we don't have a bid, and it's not only that strike. Multiple strikes got zero bid. So this is representing a very problematic lack of liquidity at those price levels. Okay, and we don't want to be exposed to that problem. Okay. In any case, I was going to say that when I was pointing at the 28 here and it was less than 35, I was going to say that in this trade we could adjust it a little bit and force it, and because it's 49.29, it would not be a wrong thing to say I want to use 49.5. Okay, and in this case now you got 42, which is more than 35, and this would not be a crazy approach at all. This will be valid. But again, I'm not going to do it. Why? Because there is no bid. Okay, there is no bid. So it's a theoretical price. There's no way you're going to get that. And even worse, if you want to exit, there's no way you'll be able to exit, and it's a big problem. Okay, so no trade for us on TJX. And again, sometimes, okay, and it seems that this could be the day. We spend 30 minutes, 45 minutes planning trades together here in the sessions, and we end up concluding no go, no go, no go, no go, no go, and we end up the day with no trade. Okay, and when that happens, certainly on my end, as you know, your guide in the sessions, I really dislike when this happens because I want to execute as many trades for you guys. So we learn through practice. So the more I can get you practice, the better you will learn, the more questions you will have for us, the more you will clarify, the more you will develop yourself, right? But at the same time, one of the lessons to be learned, and many times it happens to us in the sessions, is that not trading is trading. Okay, because if you were to take a trade where those trades are not meeting the rules of the setups, and we have the rules for a reason, right? So next thing you know, you will have a very, very big problem. And you would be executing trades of a low quality instead of executing trades that have certain level of quality, which quality in trading equals probability, right? And you want that. So be picky, learn to be selective. Okay, it's okay if one day you spend an hour or two looking for trade setups and you don't find anything. You know what? That day was not a trading day, and that's it. Okay, and this will happen to you from time to time. Okay. Next one is Billy. A question from Sandeep. Hi, Jose. Do you follow some approach during your live trades You Can Trade? You Can Trade can be seen as more advanced at times. Okay, so again, trading is trading, and the key here is the UFOs, and I am indeed using UFOs everywhere I go because that's how I trade, and that's the nature and the mechanics of the markets behind the scenes, if you wish. So no matter what you do, the approach could not vary much, right? But again, with You Can Trade, we are doing more advanced things especially when it comes to derivatives and things like that. Okay, we're in the Trade with UFO YouTube channel. We put a bit more effort into forex trading, especially with all the other coaches that we have now in the schedule. Okay, guys, so keep that in mind. Anyway, so let's continue. Billy. Okay, so let's take a look at Billy. So Billy has a earnings date set to be August 31st. Okay, so we have multiple opportunities there. I never traded that stock using options, so I am curious to see what the level of liquidity will be. And I was thinking maybe it was going to be limited. Notice that first thing that we can see is that we only have monthly expiration dates, okay? And as we just said, the earnings is August 31st, okay? So we can go all the way to the end of the month, but basically we are left with only one choice, which is August 21, okay? Now, when looking at August 21, it does look liquid. It does look okay. Only problem is gonna be a big one, is that the strike price increments are $5 at a time. Okay, so the few options available are liquid, but the problem is that there are few options available only. We don't have 40, 41, 42, 43. It's 40 or 45. Okay, so we are depending on a little bit of luck on our charts. Depending on where the UFOs are, we may be able to do a trade, or we may not be able to do a trade. Is that simple in the end? Okay, so let's go ahead and calculate our probability first, so we can spot from the current price, which is 43.91, how far down that stock may go. Okay, so let's do it by right clicking, analyze and sell a vertical spread, and again, if it's far, then it's gonna be a problem. Okay, hopefully it's gonna be around the 40, because if it's below 40, oh yeah, that's it. So we have a problem. It's 38. Okay, it's 38, so if it's below 40, we got a big problem. 38 is gonna bring us all the way here. So then to do the trade, we need to use those UFOs. Okay, nothing wrong with that. But what's wrong though is that 36.71, when we look at the options chain, okay, which forces us to use 35, and 35 only pays 10 cents. Again, that's the problem of having strike price increments, which are $5 at a time. Okay, so that's why I said we are depending on a little bit of luck there when it comes to where the UFOs are going to be relative to the strike prices and the probabilities. We needed the stars and the moon and the sun to line up, and it was not the case. Okay, so we're going to continue with the next one. So the next one, it's WDC. Okay, I'll finish the list, guys, to see. Actually, I'm going to look at 2 or 3 more. The last one, $29 per share, it's too low. Okay, so I'll pass this one. Now, I'm excited to see that stock, which is in a very bad position with a minus 15% down. This may create a situation where we may have great level of probabilities in our favor. But again, we're gonna have to assess that properly later on. Okay, is it maybe because of bad earnings? If that's the case, then we cannot take the trade, because that type of drop is not a joke. Okay, so let's take a look. Yeah, that's what it is. That's what it is. Terrible earnings for that stock, and the stock is plummeting 15% down. We cannot do the trade because, again, as I said before, implied volatility right now is updated based on the end of the day. I need to move to daily time frame. Okay, I mean, I'm not giving up on the trade yet. Okay, so I'm going to check on this, and maybe we'll give it a yes. Normally it would be a no, but given the fact that the move is 15% down, it may still be a yes. So the implied volatility that the scanner picked up to end up with WDC Western Digital on our list was 33.99%. So on the option chain, what do we have? Okay, WDC. Remember, when stocks report earnings, we need to wait one full day for this to be updated on TradeStation. Okay, well, actually, we got 48%. We got more than what it was. Okay, so that's a rare case. Normally, the day after earnings, or even the day when earnings take place, you have an important drop on implied volatility. It's not the case in this case with WDC. Okay, it's not the case in this case, and the reason why is this crazy drop going through 2 green UFOs in a row all the way. Okay, so yeah, so we may have an opportunity then, guys, in the end. So let's take a look. Okay, let's take a look. 49%. with regular session pre-post market is giving us 44, so that's not good. And regular session is giving us 49, which is good. But problem is that we only have one UFO. We need two UFOs to defend ourselves, isn't it? So going back to the monthly time frame, it seems I'm going to have to load data all the way from August 2011. Okay, August 2011. So you're going to have to bear with me on this one. It's going to take a little bit of time. First date, August 2011. Lots of waiting time here with a PB on the upper left because we need to load a lot of data, and we'll do the trade here in a minute. Okay. In the meantime, I'm just gonna go ahead and select the next expiration date, which is August 14. Let me see the premiums that we have there. Yeah, below price is very little because this is a low price stock. So I'm gonna start with August 14. So analyze a vertical spread. Plus and minus 1 standard deviation. Okay, plus and minus 1 standard deviation. And this is telling me that based on statistics, okay, what would be expected to happen is for the stock to be trading at $35 a share from now until the end of the next week. So 35, it's actually quite close. Okay, it's actually quite close. Again, of course, the size of the move is significantly great, okay, and the probabilities are based on the implied volatility of the options. The implied volatility of those options right now are using August 14. So let me add it here. I'm gonna add it. So columns. So implied volatility. Here we go. So implied volatility for options really vary a lot, okay, depending on which strikes I use. 46 is 49 is 70. Okay, so if I use the 30, it goes all the way to 70. So yeah, but anyway, the average is 48.5. So this is what is being used in the calculation, and I'm just gonna mechanically respect that data. Okay, but I do need to see my UFOs. Okay, great. So I got my UFOs there. I got my data loaded. So turning on AutoUFOs, and notice that if I was to look at what statistics suggest and then pick two UFOs, that would force me to sell options around 24. Okay, and yeah, I mean using August 14, if I sell the 20 something, I get paid zero. Okay, so I'm gonna have to move further away in time to see how much I get paid. And the 20 something still zero with one more week. So I'm gonna look at this up to September 4, and it's still zero. So everybody believes that stock is not gonna drop so low. If I do September 30, still zero. Yeah, so we cannot really do a trade here, even though there is an opportunity statistically speaking. None of the options are giving us enough premium when looking solo with those 24, 25. Okay, so yeah. So anyway, I guess that's what it is. Okay, so today was a little bit of a day going through market and market and market and market, and we just got no go, no go, no go, no go. Okay, and while it's not fun when it's like that, sometimes trading is like that, and being disciplined and not falling into, you know, lack of patience, revenge trading, things like that. It's extremely important, especially when we do it together in the YouTube channel. So I guess that it's easy for you to follow because, you know, I kind of lead you, so you follow and that's it. But when you are doing this by yourself and you are isolated in the comfort of your home and your desk, and you start looking at the charts and you start looking for the setups you have seen work well before, but now you don't see those setups, or you see the setup but you don't see the premium. And so sometimes, okay, that lonely moment, it's very dangerous in the sense that, you know, human emotions may impact you more than what you realize are impacting you. And I like to phrase it when we spend time together, so you become aware of that. So if you are trading at home and you are like, oh my God, what's happening to me is exactly what Jose said could happen to me, then you will know what to do, which is, control those emotions, cool it down, maybe, go for a walk and come back, and continue trading instead of, start making emotional mistakes in your trades, just because of that. Okay. So, by the way, if this has ever happened to you, if you have been in a situation like that, and you understand very well what I'm saying because it happened to you before, you took those trades and then you look at them and it's like, why did I even take this trade? It makes no sense. But at that time, with that moment where it was you and and your computer isolated into the room, which happens to all of us when we trade, isn't it? So it's easy to make mistakes. So I like to point at this. Okay. Cool. Furman, thank you, Jose. No trade better than taking a bad trade. Absolutely. This is a very good mentality. This it takes a while for some traders to learn that lesson. Okay. Some traders don't have the patience, and they have to develop the patience. Some traders would understand it easy. Some traders will need to go through a collection of losses to kind of be slapped in the wrist enough to be like, okay, maybe I'm doing something wrong. Okay. So again, listen carefully to this wise advice, and not only coming from me in this case as your guy, but also wise advice coming from other traders with us today that have gone through the experience. And in this case, Furman, thank you for sharing, because again, it helps for newer traders to realize the mistakes or the experiences from others. Could be other traders, other students, other instructors as well, and that hopefully help to develop yourself. In any case, we'll call it a day here, guys. It's been a pleasure as always to have you in the session. Thanks for joining me, guys. Hopefully a bit more practice on the next day. Keep up the good work. Remember, be disciplined. This is today's lesson. This is every day's lesson, really, to be disciplined. Today more, because it's discipline plus patience. That's the lesson. So keep up the good work. See you soon. Take care, my friends. Bye-bye.